And ultimately what I kept coming to was like, well, what would I rather be doing? Do I want to continue engineering? No. At least at the time of what was out there, I couldn't see myself being as excited every morning as I was about trading. I call it $250,000 loss because it was the same trade, but it was two different brokers. 125K the first day, 125K the second day. Yeah, it was a wake up call. But at the end of the day, I also need to understand that like if price actions tell me something different, I can't, in the name of dilution, hold my short no matter what. I made like just over 200 grand on that particular trade, but I soon realized later down the road that same setup had just bigger risks or worse. Put it this way, instead of pushing myself to trade, I wanted to be pulled. Like I wanted something so good to be like, you feel dumb to miss the trade, it's so good.
If you were to tell me that as a 21-year-old sophomore in college, it was possible to make thousands of dollars in my dorm room, I would tell you, no way, that's a scam. But our guest here today actually did it. After losing more than half of his $6,000 account initially, Kyle did not give up. He refunded his trading account and really dove deep into identifying strategies that worked for him. Kyle has since then turned that small account into over $3 million in profit. In this podcast, you're going to learn trading strategies that work best for growing a small account under PDT rule, how to master stock selection and aim for high probability trades, trader psychology, and how Kyle developed a high level of discipline in risk management. Spoilers, Kyle is a really rare case in trading. He's extremely self-conscious and reflective, which is the main reason why he has not blown up a single account in the 6 years that he's trading. Make sure to hit the like button and share this video with your trading buddies. Now let's dive into our conversation with Kyle Williams. Welcome to the Humble Traders Podcast, Kyle.
Thanks for having me. This is such a delight.
Thank you for making that 2-hour drive from San Diego up here.
Totally, absolutely. It's not too bad of a drive. It's pretty easy, straightforward. So,
if you don't mind sharing, like what kind of trader are you to our audience, and what kind of trading style are you focusing on right now?
So I'm a short bias trader. I do go long. I do go both ways, but I would say 90% of my profits are on the short side. I like to say I'm so bullish or I'm so bearish on bullish. Like I love when stocks go up, but ultimately it's because I enjoy shorting them to have them come down and gain that kind of momentum. But yeah, I'm a momentum short seller. And most of the momentum I trade comes from smaller priced nano or micro cap stocks. So any stock under, I think my sweet spot's like $3 to $4.
Okay.
But I will trade stocks that go into the 10, 20 range. Like if they start at 5 and then run up to 20, 25, that's totally fine with me. It's wherever that volatility is, an extension comes from, I end up shorting. That's most of my profit is shorting those kind of stocks. So.
Did you always start with short selling when you first started trading?
When I first started, I was pretty open to shorting and longing. I wasn't when I first started like I only want to long or I only want to short.
Yeah.
I actually remember when I first opened up my E-Trade account, almost too freely willing to test it all and try it all without knowing what I was exactly doing. And it wasn't until about a year in or so that I finally realized shorting was probably the better edge that I can develop. But my first setup I ever learned actually was going long. So I've always had it in me to go both ways, but just the way it ends up is 90% of my profits end up being on the short side. So
I think a lot of traders, myself included, when we start, we didn't know shorting was possible, so that's why I asked you the question. But I realized every stock I bought just like ended up going down. So I'm like, okay, why don't I just do the other way then?
Yeah, exactly.
Yeah. So how many years ago was that when you got into trading?
So it was the summer of 2016.
Okay.
And I remember specifically because I was a freshman going to sophomore in college. And I was a mechanical engineer, and I knew I didn't want to do that for the rest of my life. I just knew it wasn't something, I enjoyed the math aspect of it, but in terms of actually being an engineer and maybe building something wasn't really my strong suit. But I found a lot of interest in just stocks. I've always been interested in stocks from the beginning. Like I had the best thing my dad ever did was have me try to buy he had a mutual fund I bought as a kid. But I think one time
mutual fund?
Yeah.
Oh,
well,
okay.
So I guess backstory to that is when I was, I want to say 7 or 8 years old, I had a best friend who got money for doing allowances from his parents.
Okay.
And I remember asking my parents, like, why don't I get an allowance like that? And so we kind of made a deal, like if I, pick up the dog poop, take out the trash, and like wash the dishes every dinner, they would give me $5 a week. Oh. And my parents, the best thing they ever did was they said, okay, Kyle, if you can save up those $5 a week, up to like 20 weeks, like save up $100, we'll take that money from you if you're willing, if you let us, and put it into a mutual fund. And at 9-10 years old, I don't know exactly what a mutual fund is. All I know is if I'm not going to spend this money, they've pretty much convinced me that like it's going to grow. I'm like, okay, sure.
Okay.
And that was the money that actually helped me start trading with. Essentially what happened is when I was then back to the college part, when I tried to look and find what else would I want to do besides mechanical engineering, I ultimately came across the show, The Big Short, not the show, the movie, The Big Short.
Okay.
Where it talked about the whole
one of my favorite movies.
Really good movie. Yeah. And when I first watched it, I had no idea about half the stuff they were talking about, right? I just knew money was moving around, the economy looked bad, and then it dropped, right? I had no idea what it actually meant, but I ultimately realized like the economy fell, 50, 60% or whatever it was.
Yeah.
And at this point, I'm 20 years old. I had completely forgot that I even had this mutual fund at this point. This has been maybe 10 years now.
Okay.
And it made me realize, like, did my mutual fund drop 50%? Like, was it affected by this whole thing that happened in 2008 that I had no idea about? I'm like, what? I was probably like 12 years old at the time, right? Or not, no, wait, I don't know the math. Like 14 or 15 maybe. But, and essentially I ended up looking up the ticker of the mutual fund or the fund itself. Okay. And yeah, like I lost 50%. And it was a huge, I mean, it came back obviously with the overall markets by the time I looked in 2016, but it had kind of, it was a very big wake up call that like, wow, if I don't try to manage whatever this money thing of the stock market is, I'm just going to be susceptible to any economy downturns that come forward, like in the future. And so that's what really got me into trying to figure out what exactly trading was. Because at the time I was such a beginner, I didn't even know the term like trading. I just knew I needed to manage money than just holding it. Yeah. And ultimately I ended up cashing out that mutual fund because it just followed the market, if not underperformed after like fees. And at the time it ended up being like 20 grand. Saved up, yeah. I mean, I stuffed it. I mean, Christmas money, birthday money, and everything, and it just turned into that over time. So,
and is that your seed to start trading with?
Yes. So that was pretty much. I pretty much pulled out all of it, used most of it to either start buying like a software education, and then funded a $6,000 E-Trade account. So yeah.
So in a way, that mutual fund really
it's helped me for sure. Yeah.
Okay.
If I didn't have it, I mean, I was working a part-time job at the time as in a restaurant, and so I probably could have eventually saved up from that because I've always been a frugal spender. I was never one just blowing my paycheck kind of thing. But I definitely would not have had enough to just immediately start. I would have had to save up for sure.
So you started in college with that $6,000 small account. Well, it's not small, but nowadays it's a small account.
Right.
How did that go when you first started trading with that $6,000?
Funny, because so the first couple of trades I took, one specifically, I'd followed like an alert, right? I started with Tim Sykes, so he put out this alert, and everyone says don't chase alerts.
I've done those too.
Right, and of course, little old me as beginner, like, I was like, yeah, whatever, I'm just gonna buy this stock with him.
Okay.
The worst thing it ever was it was a winner. It was a huge winner. I made like $450 or $480, I think. And I thought, this is amazing. Like I've always learned or heard traders who have that one trade that gives them the bug of like, this is incredible. Like I want to keep doing this. This trade was that for me, to the point where I thought I figured it out. And this was like 2 weeks in, so naive. Yeah. That a week later, I'd pretty much given it all back. So it was a huge slap in the face, but it was a good slap in the face in the sense that from then point on to the next, call it, 6 to 7 months, I had dwindled that $6K account down to like 2,300. So down about like 70% or whatever it is.
So you were like slowly kind of taking these like losses, following alerts.
So I guess to clarify, so that once I started following a few more alerts and started giving all that money back, that pretty much stopped. I learned that lesson very quickly. All the other losses was just me trying to test things out, trying to figure out strategies. Sometimes to the point of even gambling, just, I think the stock's going to go up, and I just buy it, having no idea what I'm actually doing, right? The best thing I did, I just didn't take any large losses after that, like after giving back that $480. I never took any loss bigger than $100, $200, but it was like death by 1,000 paper cuts. Yeah. Right? It was like slowly bleeding every month to the point where like by the time I started 2017, I was down, like $4,000-ish, like 3,700. So
what made you decide to kind of, because in college, losing $4,000 out of 6,000, that's what, 70% maybe, or 80% of the account? What made you decide to keep pushing forward? Because you're in college, you're studying to become an engineer.
Right.
you have a future ahead.
Yeah.
Why did you like stay with trading and trying to make this, this job, this potential career work?
Yeah, I think I found a passion for it that persisted through and persevered through, because I had thought about a lot of times, because totally during that period, there were definitely moments of quitting. There were definitely moments of like, what did I get myself into?
Yeah, like what's the point?
Right. And ultimately what I kept coming to was like, well, what would I rather be doing? If I'm not doing this, if I'm not going to try to give it the best shot and figure this out, do I want to continue engineering? No. Do I want to switch majors, which I eventually did. I switched to a finance degree. But even in the finance degree, like I couldn't, at least at the time of what was out there, I couldn't see myself being as excited every morning as I was about trading. For context, like I'm not a morning person. I would sleep until 10 a.m., 11 a.m. every morning if I could. And so me waking up, on the West Coast at like 5:30 every morning to prepare was like totally out of my comfort zone. But like the love and passion I had for trading, what got me to do that. And I couldn't, at the time, I just didn't have anything else that was like, I could even think of having that level of interest in something like that. Like in college, you'd have to, tear off or like pluck hairs to get me to read, something painful to read a book for college. But for a trading book, I've read more books on trading than any other book topic ever. And I'm not a reader. Like I don't like reading.
It's just, and you even switch your major to do this.
Yeah. So it just was something like, what would I rather be doing? And I just kept doing and persevering. So. And
obviously you made the right move.
Right. Yes.
Yeah. So you switch your major and you're trading that $2,000 account. Mm-hmm. What kind of got you to eventually to, everyone goes slowly, hopefully, red to green. How did you get to that point after having a $4,000 drawdown?
So once at my lowest point of that account, I had officially come to the conclusion that I need to just stop trading, right?
Okay.
To the point where it's like clearly all of my trading up to this point has led to losses. And so I need to take a totally different approach of what I've been doing to have any kind of profitability, right? And so ultimately I came to the conclusion of like, I need to wait as long as I need to wait. I don't care if it's 1 week, 3 weeks, a month, 2 months, until I wait for something that I feel I'm so confident in of a strategy or so confident of a potential trade to take that instead of pushing myself to trade, I wanted to be pulled. Like I wanted something so good to be like, you feel dumb to miss the trade. It's so good. And ultimately I came across Fannie Mae, FNMA, which is, I think it's below $1 now in terms of trading. But back then in 2016 and 2017, it was around, I think, $3 or $4 or $5. And it had this pattern that played out every year or so. And I think it ended up happening about not 6 years in a row, but 6 times over the last 2 or 3 years, where it would have, 30 minutes of straight buying, like a just perfectly, trendy morning spike, and then a full hour of straight selling. So it'd go from like, say, break even on the day to up 30%, and then with an hour down 30%. So like a full 60% kind of moved up and then down. And then that led to this huge kind of bounce move where it was like you can see it on like the level 2 and like the buyers and sellers, where literally the selling would dry up and all of a sudden all these buyers start coming in, where it turned into a panic dip buy essentially.
Right.
And that setup but I didn't even know at the time, but I actually had been studying and watching videos on it. I didn't know it was going to be a setup of mine, but I had watched it enough times to understand like this is a setup I can comprehend and know how it actually works in the market. And so when I saw that happen, I said, I've seen this before. And so I dip bought it and made like $25, but back then in E-Trade, this is when commissions were $10 in and $10 out.
Okay.
They weren't free anymore. So I made $25, but paid $20 in commissions. I made like $5. And it was...
But that was the one obvious trade you've been waiting for.
It was the first trade where I said, I think I know what's going to happen. And I was right. Right. To the point where it gave me an essence of repeatability. It wasn't just this random buying or selling of a stock. It was like, wow, this has happened before and it just happened right now and it can happen again. And so that was really the first setup for me of this panic dip buying idea that got me to stay consistent, to actually have something repeatable versus just, quote unquote gambling, buying because I think something's going up or selling because I think something's going down.
Okay.
So.
Like I mentioned many times before on this channel, most profitable traders I know, they reinvest profits from trading into other longer-term investments that will grow their wealth passively. This free tool It's not only a portfolio management tool, but also a social platform that allows you to follow other traders, investors, and see their portfolio holdings. This tool is Blossom. Anyone can download Blossom for free and connect the app to your brokers safely. They do not share personal data. For example, you may have different holdings in Robinhood, Vanguard, or Webull. Well, you can now securely connect them all under one portfolio analytics platform. There's also a social feed for you to connect with other traders or investors who are following the same stocks. And you can even see their returns and what kind of trades they've made in the past. For example, on my profile, you can see all my investment holdings, how much I'm up or down on the year, as well as my recent buys or sells, all in percentages. So make sure to check out Blossom. It's free to use down below. I'm an angel investor in Blossom, so I would love to hear your feedback down below. So this panic dip buy strategy, is that kind of the first proper strategy that you started following and growing that small account?
Yes, that was the first setup I ever really learned and got profitable with.
Yeah.
That really started growing that E-Trade account out of the hole that I was in. And ultimately, that's actually what then led me to learning how to short sell, because a lot of these panic dip buys that I was buying was from stocks that were up 100, 200, 300% over a few days.
I see.
Which led to that panic. And so that's what kind of, it helped me create this kind of, I guess, not diversified portfolio, but this two-handed, forehand, and backhand strategy where it's like, okay, if I can short it before the panic comes and then cover my short and then immediately dip buy, like flip it, then it's like a 2-in-1 kind of trade. And those were the two setups that really grew my account then from back down under, call it down $4,000 back to then break even. And for context, when I was down $4,000, E-Trade was never been a good short selling broker.
Yes.
And so by that point, I did have one more, I guess, savings of $4,000 in my account.
Okay.
To where I had then used those, so I lost $4,000. I took $4,000 more and opened up an IB account.
I see.
And that was my short selling account. So I never refunded the E-Trade, but I just used that $2K or $2,300-ish to dip buy, and then the new $4,000 account at IB to short sell. So I just used those two accounts to then eventually get back break even and then onward up from there.
So you actually have dedicated accounts for each of the two strategies you were trading?
Yes, yeah.
Oh, okay.
E-Trade wasn't that good at shorting OTCs. In fact, I don't think they even offered OTC shorts, but IB did, Interactive Brokers did. And you have to be 21. I think right when I turned 21 in February of 2017, I funded the account because I knew that was like perfect aligning of like realizing, I can learn to short these dip buys that I've been trying to buy.
And early on, were you trying to learn to scale in, or was it just one entry, one exit for all those strategies?
So I was under the PET, so I didn't really have the luxury of scaling in, right? So the panic, and that's kind of why the panic dip buy worked, because even if I had the ability to scale in, the panic dip buy it's such a quick thing, like the turn from a panic into a bounce. It's such a quick. It really happens in a matter of seconds to a minute at most.
Yeah.
And so there really is no option most of the time to try to like slowly scale in. I mean, you got one entry kind of thing. So it worked out great because under PET, that's all I really could have, which was buying once and then selling once. And so that's really what it was. I'd try to buy that bottom, have it bounce, and if it broke that low, I'm either selling for a loss or I'm selling into the bounce for a gain.
Yeah, so since you have two accounts, you could trade 6-day trades in 1 week.
That's also why I wanted to open up, because it helped me. I knew even if E-Trade, let's say E-Trade did offer good short selling.
Yeah.
At that point, I'm still only limited to 3 trades per week. So opening another one and then getting 6 was again another strategy that I wanted to use just to help lighten the impact of the PDT for sure. Yeah.
And I know you were trading in college part-time. So what was your kind of like your routine like while in school to trade?
Right. And I think being on the West Coast helped me a ton.
Yeah.
Once I realized trading was exactly what I wanted to do, and that was going to take up most of my time, I immediately then structured around the market hours. So if the market opens at 6:30 Pacific Coast time, I would try to trade from 6:30 to the close. That wasn't always the case. Sometimes I had to pick classes that were like midday. So I'd pick classes at like 9, 10, or 11 where, there's nothing really going on in the market. I'd always make sure to keep the first hour and the last hour of the market open, because that's usually the most volatile or just important times to watch, right? And then if I had to, I'd pick like one class middle of the day. But most times, most semesters, I was able to pick classes that were after the 1 o'clock. So the market would close.
Oh, okay.
I'd pick classes at 2 o'clock, 3 o'clock, 4 o'clock. Sometimes I'd pick night classes like 7 o'clock and then end at 9.
Yeah.
And that's kind of how I did that. So call it Monday through Friday or Monday through Thursday. I do pick afternoon to night classes, trade in the morning. And then on the weekends, I would either do homework that I've kind of slacked on, or I would, or then weekend nights, I would then work the part-time job. So like Friday night, Saturday night, Sunday night, or even Monday morning. We had brunch sometimes. We serve brunch. That's the times I would work my part-time, shifts at the restaurant.
So did your college, like schoolmates or classmates, friends in college ask you, like, wonder, what's this guy doing? Why is he always in his dorm room staring at the charts?
Yeah. So I lived at home, so there wasn't any like overarching roommates or people kind of in my business. But like my close friends, I told them about it, and they were supportive. But I also think they just didn't even have a clue what I was doing. They just didn't even bother to look into it because none of them were really that big into or understanding of the stock market at the time.
Yeah.
So they were supportive, not really looking into it. Most people, or maybe coworkers, sometimes there were situations where coworkers were asking what I was up to, and I definitely became more introverted around that idea of telling people, mainly because I knew and maybe your viewers know exactly what I'm talking about, like the essence you give off when you tell people you're day trading. It's like, oh, so you're unemployed and trying to gamble. You know what I mean? There's this context or this thing you give off when you talk about it like that. And so for me, I tried to just not tell anyone because I knew what most likely their reaction was going to be.
Yeah.
And it didn't.
It's a stigma.
Yeah, stigma. There you go. That's the word. And I knew their stigma didn't change how or what I thought about it or how I was going to impact or how I was going to make an impact on it or impact me. And so I tried to keep it as hush as I could. But I mean, my parents knew. My mom was supportive. My dad was obviously very critical. Very how are you going to actually pay for this? Like this is, for example, I would make $50 and he'd be like, that's cool, but like that doesn't pay the bills. And I'm like, yeah, I know, just wait and see, and now he couldn't be prouder. I proved him wrong. So yeah, I
guess in a way, the fact that you were kind of isolated at that time was good. Because you needed to focus on trading. Yeah,
absolutely. Yeah. I would say in terms of like having the college experience or getting the freshman 15, right?
Yeah, I remember that.
It didn't happen for me because one, I lived at home, so it was different. But also two, right? I for a long time, even my friends that I had from high school, there was a period of a few months where I definitely saw them very little, if not at all, because I really immersed myself in trading. I actually remember the very first month that started like my profitable trading or my streak to being profitable and going back green from being red was in May of 2017, and I don't think I went outside. I really think like for like 12 plus hours a day that whole month I was just immersed because I was right. I like felt it. I was right on that cusp of really becoming truly consistently profitable. And so I mean that was all I did for at least that month. Of course I was studying 4-6 hours maybe before then, but I just, for some reason I remember being a little hermit, and really that's all I did in the month of May.
I think that's what it takes though. Like you really need to be able to do that.
Right.
And mind nobody else's business but your own.
Right.
So coming back to small caps for a second, I know that's what you focused on in terms of small cap trading, long and short, but mostly short. How do you think nowadays the small cap environment has changed? Because obviously 2020 and 21 were great, but nowadays it's a little bit iffy. Like what are your thoughts on that?
Yeah, totally. I mean, 2020, 21 were, amazing years, incredible years. And almost the point where a lot of traders who had traded the .com kind of years or bubble compared it to that. And I was like, wow, that's what this was like. That's incredible, But 2022 was definitely then the boom and then the bust, right? And 2020 was definitely one of the toughest years I've personally traded. I was able to be profitable, but I ended up giving about half my year back in the process. Like I had made, call it roughly around 800,000 the first 6 months. But then the next 6 months just gave it all back. Like not all of it, but 50% or so. And so that was a huge kind of a slap in the face. And I was worried 2023 was going to be very similar in terms of how difficult it would be. And it wasn't going to be this easy walk in the park like 2020 and 2021 were. For me individually, 2023 feels like not exactly, but actually the more steadier market like 2016 and 2017, at least that from my experience and learn or remember. Back to the norm. And I say that because I remember myself and all these other traders watching what Jerome Powell is saying about the Fed and what are interest rates doing and what is inflation doing, where everyone was so fixated on like, how is the economy going to get through this period of the 2020 and 2023 market. And as 2023 went on, I felt like that level of pressure or that focus on these things started to dwindle, and now it's just a steady market where we can just trade. We don't have to worry about what's going to happen to the economy tomorrow. It's still not the same, right? There's still a lot of icy waters of like, well, interest rates are still high and it affects the market. But in terms of small cap, I still think there's been a decent flow of opportunity. It's just more spurt-like. So like, you'll get 2 weeks of really hot runners and momentum, and then 2 weeks you got to learn to take your pedal off the gas and not trade or take less risk, right? And I feel like it's been like that most of the summer. Okay. October this year is started to feel like it's much more consistent, mainly because I think we're going into the winter period, which is typically a more busier cycle for small cap in my personal experience. But yeah, most of the summer and fall was like a week of hotness, slowness, week of hot, slow. And so adapting that, and that's why I think I've handled and felt really good about 2023, because I'm usually pretty good at that.
At adapting to different market cycles.
And the way I do that is like, if I don't have a setup, I don't have a trade, period. So like I could see, say 10 setups in 1 week when it's hot and be like, great, it's hot. But then if the next Monday is slow, I don't see anything. Well, I don't see anything. So what do I trade? The perfect example is this week, yesterday and today, I didn't take any trades because I'm looking at the market. I'm looking at my scanners, and there may be stocks moving, but there's nothing that I know how to make money on. And so it's a very binary thing of like, the switch is off. Well, I don't trade. There's no setup for me.
Yeah. In some ways, it's since you're predominantly more short biased, in some ways, that's good because you can react as opposed to if you are long bias, you almost have to be on that first day.
Yes.
If you're short bias, you can wait for that first day to happen and then short the secondary days or whatever. Yeah.
That's a great point. That's probably also why in the beginning stages, I definitely gravitated towards being a short bias trader, simply because I was never quick enough to be able to catch that first hour or that first day of the move to catch that momentum upwards. But once it went upwards, then I was like, okay, well, if it goes too much upwards, now I have a day or two, even 3 days sometimes, to prepare myself for when it actually starts going down. Definitely, you need to be quick to really capture a lot of good long setups for sure. Yeah.
Do you prefer to short the second day, or do you have what do you feel about shorting the first day? Let's say you have a very hot stock.
The first green day or the first
the first runner of the day.
I would say I try to stay away from it most of the time. Sometimes if there's like dilution, or there's some kind of, maybe the news is total, like if you look into the news, maybe it's total BS. Like sometimes there'll be like a case study news and they said, we've had seven people try this study. It's like, okay, well, 7 people, that's not very, so it's only if you really can look deep into that. 95% of the time I won't short them because for that reason, like that's the first time you're getting buyers in, and most shorts that I see people take on those usually lead to losses. And none of my big wins are from those kind of trades. And so again, back to the whole, like, where am I making my most money and where are my best setups popping up? That area, or that time of the day, or that day specifically, is just not it. So yeah, I try to stay away. Yeah.
So you're more of a shorting the secondary days.
Right.
Yep. Okay.
Yep.
And do you ever swing those shorts? Let's say you think, a lot of these extended stocks, they can like sell off for multiple days.
Right.
Do you like swing trading overnight? And
I will if I think the stock is still extended enough. So like, let's say like, I don't know, a stock's run for 2 days straight from $1 to like 5. So like 500%, huge move. And if the first red day or the first time it goes down is only down 10%, 15%, and we're still up, call it 400%. Then I might be very willing to swing, only because I know statistically there's still more downside to be had versus if it's only up 100% and it's down 10%, like, well, okay, it's only up 80, 90% now. It's not as, there's still not enough there's not as much downside as a stock that's still up 100%, even after having the day of downside. And it's kind of it's more of an art. There's not an exact stat or science I have behind it, but it's a general rule of like, the more extended it still is, even after the first down day, will like give me an indication of like how much is it worth it for me to swing or try? Not even swing. Sometimes I'll cover and just look to reshort the next day as well. Sometimes I'll do that too. So
I used to love swing shorting, but I forgot what stock it was. It was during COVID. There was one stock that had a first red day, but it was just such a small pullback red day, and then kind of consolidated, and the next day kind of ripped back up higher. So I stopped doing that.
And that's something to be careful too of. And that's most times I'd prefer to just cover and then just reshort the second day for that reason. Sometimes it's just not worth the stress. And I would say during the 2021 and 2020 market, I probably did that less because I knew how strong everything was.
Yeah.
In fact, what period? I think it was the December through February of 2020 into 2021. I had made almost just as much, if not more, on the long side, because that was like the peak of everything, where everything went so nuts, where I would have like 10 long positions at one time. I had too many charts. There were some times where I just wouldn't even look at certain charts because I would just buy a stock and then put a stop loss and then stop watching because I had 8 other stocks to watch. It was that insane. So definitely, depending on the market environment period, shorting overnight definitely has its disadvantages for sure.
So since you also dabble in long, where have you? I understand you make most of your money from shorts. Do you take the biggest loss or like most of your bigger losses from the long side then, or how does that look like?
I would. Well, yes and no, but for different reasons. So like my biggest trading losses are from the short side. My biggest. I want to say they're trading, but really it was me diverting from my strategy and trying to be kind of a long-term investor, let's call it. So essentially I'm long, but I've had a few like 50, 60K and then like 100K losses on the long side, mainly because I just bought stocks for the long term and they just went to crap. And this was this was ending 2021 and into 2022. So right when the bubble ended, into the recession, I just kind of I chalk it up to like I had too much money. I had made too much money to know what to do with. And so like, I have 300K to just park in these stocks that I like. And over the course of 2022, they just were down 40, 50, 60%.
Okay, so it's more like a swing trading loss.
Yeah, it turned it right. So and that's why I say that, because it was never really any of my long strategies in terms of day trading. It was like I'm just going to throw money at these stocks because I like them. And it turned to be a worst possible time to do that. And eventually I took those losses, so that's why they were bigger. But in my brain, I compartmentalized them. They were separate from my quote unquote long trading strategy. Yeah.
Okay.
Yeah.
So I guess the actual trading loss would be the shorts.
Yes, by far my biggest losses are on the short side. Well, I guess, and the one big trading loss on the long side I can think of is actually what kind of burst the bubble of 2020 and 2021. It was February 2021, and it was a panic dip buy. I had made more money on panic dip buys than ever before in that year because everything panicked and everything just huge bounces because the volatility was insane. And I had a bad habit where a new kind of trend that I had seen was, instead of, like I said, when I learned is when they panic, you get one entry. Like you get one time to try to buy it and bounce it, and either it fails or it doesn't.
Yeah.
During that hot COVID market, it would bottom once, fake out, and then bottom the second time. So it happened where I would actually have to cut my loss and rebuy. And it happened so often, I said, you know what, I broke my rules. I'm not going to cut the first time.
Yeah.
I'm just going to add on the second attempt. And then it worked. And so I kept doing that, and it worked. And that's why, it was, you can call it adaptation, but at the same time, I was also breaking a rule. And it was only a matter of time till one of them doesn't bounce the second time. And then I'm met with a bigger loss than I wanted. And the ticker MMNNF, right? Or I think it was MMNF.
Oh, so it's an OTC.
Yes.
Okay.
It was one where it panicked, bounced maybe a few pennies a share, and then
keep panicking.
Kept getting, and then it just all day it turned into this like panic, slide, bounce. So like this huge grind. And it ultimately led me to just keep buying, like on like a habit at this point, just keep buying the new low. And before I knew it, late day, I'm like, this isn't bouncing, and I have a way too big a position. And so I eventually sold that for like a 90K loss that day. And that was my new biggest loss at the time, and it was on the long side for me, just again breaking that rule so consistently, and finally realizing like that pattern's not happening anymore. Like I need to go back to sticking to that one attempt, because they can just keep bleeding. And so yeah, that's my biggest loss, at least in terms of trading that setup.
Yeah. What about your biggest loss in terms of the short side?
So my biggest loss was it was 2 technical trades on HKD. Both were $125,000 each. But the reason why there were 2 trades is because they were in 2 different brokers. So I had 2 brokers who pretty much took the same position. I don't know why at the time I took the
same entries.
Yeah, pretty much same average, same size. I don't know why I separated it, other than one account was, I think one I was trying to day trade and the other I was trying to swing. And so I remember it was a Friday, I was short from like the one 170s, 180s in HKD.
HKD went to 2000, right?
Yes.
Okay, so that stock. Okay,
this is
I didn't trade that stock, but I've heard of it.
So this is the beginning before the disaster, right? And so I am essentially, it came to me just ignoring all rules, really. I mean, I had said, if it breaks over 200, I'm going to cut the loss. Goes to 250, don't cut it. Then it panicked all the way down to like 150, a full, 100 points or $100 a share downside. And I said, okay, this is the beginning of the end, right? That there's no way this can recover from that kind of move. Over the course of 2 or 3 hours, it kind of grinds back. It ends up being at 200, then it breaks 250, and I kind of deer in the headlights just freeze.
And you held that position through when it went to 150.
Thing. Yeah.
Okay.
Yeah. And so I just broke 250. I froze, and then it went to 400 within the next hour. And at this point, like, I'm just frozen. I can't believe it. I'm almost in shock at this point, along with then being stubborn and maybe greedy of like, I don't want to take this loss. Finally, on the swing trading aspect of it, or the day trading aspect of it, I realized, no, I need to exit this. Like, this is clearly not good. So I ended up getting out in like the high 300s. Was the first 125K loss. I still have the swing idea on, which is also
you want to swing short it?
Yeah,
I'm like sweating now.
Right.
Okay.
And so that was the first trade, the first half of it gone. I still had the other broker with the same position and the same average, down the same amount. Okay. Why I chose to hold up, I don't know. It was denial at this point. I'm exiting half of it, but I'm like, you know what? If the other half works the next day, like, it'll be okay. Monday comes around, it doesn't even break down. I remember I think it held 400 like all day long, and I'm like, this is the exact opposite of what I thought was going to happen. The good part about it was that I eventually came to the light at the end of the tunnel. Like, I knew many other traders, unfortunately, who just never came to that realization and just kept holding. The best thing I did was get out of my own way and be like, you need to get out of this. And so I covered that other half at like 400 before it went to 500 and then 700. And then by the next day was 2,000, right? 2,500.
Oh my God, yeah.
So pretty much I call it $250,000 loss because it was the same trade, but it was two different brokers. 125K the first day, 125K the second day. Yeah.
A lot of lessons from that loss.
Yeah. Yes. Yeah. It was a wake up call. It was really the theme of that 2022 market where I gave back half my year on the fact that I just had, the market gave me too much money too soon. And it was a lesson I needed to learn of like, if you don't take care of what you've made, you will give it back. Like, it will go back into the market if you're not careful. And that was a, huge, call it slap in the face and a reality check. So, yeah.
I think HKD is one of the first wave of super low float, super sketchy fundamental SEC filings, the Chinese stock that kind of got a lot of short sellers. There was many others that follow that, like AMTD, like C something.
Top this year.
Yeah, TOP, GDC, GCG, GDC.
One of those, yeah. There's a lot of as short selling has got more popular, there's been more and more squeezes that have been alarming. It's very different from previous years where you'd maybe see some hot runner or some hot move once a year, and it was maybe a 500 to 1,000% move. Yeah. Now we're seeing maybe a couple times a year of these moves that are going 3,000, 4,000% over the course of a day or a couple of days, and it's scary. It's that much more important to have a risk management and risk system in place, because if you don't, like, you could very well get caught in one of those, so.
Yeah, I think it used to be like if you use SEC filings and do the research on the dilution and you have access to shorts, it used to be that was an edge. Nowadays, I feel like that's the downfall of a lot of short sellers, unfortunately.
Yeah,
because you get so much conviction from the SEC filings.
Right. Yeah. If there's like so much dilution and a group of short sellers are like, this thing has to go. It has to go down. Right. The famous saying. And that's why I will look at SEC filings. I will look at how dilutive a stock is. But at the end of the day, I also need to understand that, like, if price actions tell me something different, I can't, in the name of dilution, hold my short no matter what. I think that's what causes these squeezes, is that too many short sellers are then get stubborn, and by one gets squeezed out, another one, and then it's this upward spiral effect of everyone just squeezing each other. And because no one wanted to admit the fact that dilution is just not having an impact on that particular day, So, yeah.
So thank you for sharing with our audience your biggest loss. That must have been like a really painful memory.
Absolutely. Yeah, it was. Luckily, it was at the point where it was money I can afford to lose, right? And that's how I've always kind of used getting over emotionally big losses, is that it's not that I lost the money, it's that I'm fortunate enough in a position, or as it is, to get to lose that money, right?
Yeah, that's true.
The way I see it is like my very first big loss was I lost $4,000, not in the overall account, but say in 2018, I had a $40,000 account. Like I'd been profitable. I took a loss of around $4,000 in the first hour of the day. And that was my first gut punch, very similar to what like HKD would have done or did to me. But when I got over it was like I just lost $4,000 in 1 hour, and I lost $4,000 in my first account 2 or 3 years ago.
Yeah.
You know, so it's like it's always a reflection of like, look how far I've come. Doesn't mean the loss is okay, but it's like you're all right if the world isn't, you know, falling apart. So.
Remember, traders, I'll always tell you to learn from the mistakes that these pro traders are making, rather than focusing on how much money they make. This is how you can improve your trading, by absorbing all the lessons from these pro traders. Remember to hit the like button if you're enjoying Kyle's story. So tell our audience about your kind of how you select your stocks to trade, because that's equally as important as like having the right strategies, right? So how do you pick these stocks that has enough, I guess, liquidity and all that good stuff for you to enter in and out?
Yeah. So when I first started trading, I was very broad because I was such a small trader. Volume and liquidity didn't really matter to me because it was so small. Like if I had 100 share position size, well, I could trade something that only has a couple thousand shares traded in the day because I'm so small.
Yeah.
Now that I would like to trade fairly big size, not the biggest, but certainly way bigger than I started, I need stocks with volume. So I'll love to scan for stocks that are trading at least a few million to tens of millions of shares a day.
Okay.
Sometimes the lesser is okay, but again, it also depends on dollar volume of the stock's price. Like 10 million shares of a $1 stock is way different than 10 million shares of a $10 stock. It's the dollar volume is different. So I definitely need millions of dollar volume to trade it, because I could take anywhere from a $50,000 to a $200,000 position on any given stock. So it's like I need that liquidity to get in and out. That's the first thing. In terms of like what I like to short sell, it's very similar to what I said, where it's like that first screen day gets my attention. Where a lot of short sellers might take losses, they get squeezed or whatever. I don't like to touch it. I then love to watch those first green days turn into second green days, maybe 3, maybe 4. At the most, I think I've seen like 10 green days in a row where it just keeps on going, right?
Yeah.
And I'm then at that point, the higher it goes and the more green days in a row it goes, I get more and more interested in when's the first time it's going to go red. Like because if I'm a short seller and let's say there's no dilution. The only way I'm going to make money if a stock goes down is if there's long selling.
Yeah.
I can't count on other shorts shorting with me, because ultimately that usually will lead to a short squeeze. Like if there's too many shorts in a stock, then we all cover together. Well, there you go. We all squeeze ourselves. So the only way I confidently feel like a stock's going to go down is if there's more long selling than shorts covering and or buyers buying. And so let's say that stock is up 3 days in a row. I'm looking for signs that sellers are finally realizing, oh crap, if I don't sell now, I might take I might take losses or a smaller gain later. And sometimes that's the first time it's ever gone red in the day, like percentage wise. Sometimes that's the first time a morning spike has tried to go up and immediately fails, versus the last 2 days it actually went for the first like 30 minutes. Maybe it gaps down the first day. All these little things that I'm trying to look for to show me, it might just look like those little things, like, oh, it's just a gap down. What could that possibly mean? But then if you put yourself in the thousands of people who are long, they're thinking like, oh crap, I was up 500 yesterday. Now I'm only up 400 today. I better get out.
Yeah.
And you get 1,000 of those people selling, and all of a sudden you result in something that caused the stock to go down for the morning. That's really what I like to look for.
Yeah, so you care a lot about the psychology of those long bias traders, like how they think when they're most likely to sell, and then hop in when they're trying to unload.
That's really the basics of the markets, right? You need to understand the mechanics of why a stock is moving in either direction, and it's either there's only 4 ways, right? It's either longs are selling, longs are buying, shorts are entering, or shorts are covering. And so it's hard to tell whether it's selling or shorts entering or buying and shorts covering. But again, given where you're at in the pattern, given where you're at in the stock, whether it's overextended, whether it's overbought, oversold, all these kind of indicators you can kind of put together to build a story of like, well, okay, I don't know how many shorts are covering, but I can assume most are probably. Or I don't know how many longs are selling, but it's likely most would sell right here, or are feeling at least uneasy that they might want to sell here. That kind of idea, yeah.
Do you kind of stock your stock
yes.
for like the entire morning, or like especially when it's having its first green day and what's your process like? I guess that's my question.
Yeah. So part of the I say that all the time, stalking the stock.
Yeah.
Because because I'm not taking it long on the first screen day and I'm watching it, I like to see, can it go a second day? Can it go a third day? And then again, the more days in a row it goes, the more interested I get. So then, every morning I am watching. I'm like, okay, is this the first day it's going to go weak? Or like, okay, it's had morning spike the last 2 days in a row. Is this going to be the third day it has a morning spike? I'm trying to look for the characteristics behind a stock, right? Every stock I think has its own personality in some way, shape, or form.
Yeah.
And so finding out what those characteristics are better help you make, I think, more informed decisions when it's actually time to enter your position. Totally.
Yeah. Okay. So does that mean you have, let's say, 2 days out of the week with no trades then, if you're just watching a stock?
Right.
Okay.
Yeah. Yeah. Like today I just watched, I don't even remember the ticker, but I just watched stocks today. I didn't trade, watched a few that I was watching, because none of them were really setting up, but I thought to myself, if they can get to these prices or if they can go in these directions, I'm going to be that much more interested. And so I'm watching how they're moving. Are they even strong enough to get to those points? Are they weak enough? Like, how do they look? How are they acting today? What are other people saying about them? Stuff like that. Yeah. Yeah.
I think I'm very impressed with your patience, especially the charts you post online. Like you have like a couple entries, like we said earlier, a couple entries, and you wait like an entire day for an exit.
Yeah.
So how do you sit through consolidation after you've entered a position, whether it's long or short, and it's taking its time? How do you sit through that, and how do you know ultimately when to get out?
So for me, it's really about the trade plan. And in the earlier stages of my trading, journey, I struggled with patience because I didn't know the importance of sticking and staying in that trade plan. So if I just got bored or I got uncomfortable, and I could have been uncomfortable for any which reason, like I had a random daydream that I'm going to take a loss, even though the stock's doing nothing. So I just sell, right? Ultimately, I had to retrain myself to realize, like, if I'm still in the trade and a setup calls for a certain type of move to happen, like let's say I'm shorting for that first kind of red day or that first down day.
Yeah.
I know for me, that first down day should offer at least 10, 15, maybe 20% of downside. Okay. So if I'm only up 5%, I haven't got stopped out yet, or I have my stop loss. I'm only up 5%, let's say. The stock's only down 5%. And I have conviction that, 80, 70, 80% of the time, this should be 10% lower, then there's nothing for me to do. I have to just let the stock move for me versus me trying to make it move, like just by watching it, right? Like I'll watch it to know, in the case there's indicators to show me like, okay, this has been too weak for too long, or this has been too strong for too long. But ultimately, I always side on the sign of caution of I need to stay in this trade plan as long as I need to let it play out. Because there's been so many scenarios where I may think a stock's too strong, and then the last hour of the day, it just falls apart. Or I think the stock's too weak, and all of a sudden it just rips right back on me, right? So there's just so many different ways a stock can move on any given way or time or day. But on average, of at least any particular setup you're trading, having an understanding of how much it should move and in what direction it should move is what's important, because I think that's what gets me to stay in, and that fact that like there's more downside, there's more money for me to make, on average. So yeah.
So that means, do you also track a lot of statistics on these stocks? Yes.
I used to be, when I first started out, I used to be a fan of trading or of tracking the actual setup itself, like learning about it.
Yeah.
Like the penny did buy, I definitely tracked. Even if I traded it or not, I wanted to track it and how it worked and how it moved. Nowadays, I've taken enough trades where I will just journal and track my own trades and use that as kind of my data set, only because, maybe I miss some trades, maybe I don't trade some well. But what I learned is, you may have a setup that works. Like I know it works, you know it works, your neighbor knows it works. But then when it comes to actually trading it, some people can't trade things, and that's okay. Like I know certain setups work, but I will always be unprofitable with them. For whatever reason, it's my personality.
Yeah.
I don't find the right entries, I'm not quick enough, I'm not fast enough. For whatever reason, I can't trade them. And so for me, it's not enough to just know that it works statistically, but it works when I take the trade. And it's like how aligned can my trading fit the stats, right? Because I'm a discretionary trader, right? If you're an algo-based trader where you let the computer trade for you, then you can probably align the computer to trade exactly how the stats tell you.
Yeah.
But if you're discretionary, you have your own emotions, you have your own thoughts, your feelings, your life choices, like all these things can add up to end up making the trade either better for you or worse for you. And so I think it's important, at least for me, I like to track how I trade setups in conjunction with the actual stats, so I can show myself that, like, okay, I'm actually trading them correctly.
Earlier, I know you shared your biggest trading loss. Do you remember your most memorable or the biggest win?
Yeah, I have two, and one I'm really proud of, and one I'm not so proud of.
Okay.
So the one I'm not so proud of was the ticker LYT. LYT was another sketchy, low float kind of scammer stock. But instead of squeezing, it dropped like a rock. And that's why I think some of these squeezers go so massively, because so many short sellers have gotten they're like flies to a lantern, right? We all see these stocks that can, have these huge amounts of volatility. And for a long time, they didn't squeeze and they dropped like 80% in a day. They were huge moves. And so I was one of those short sellers who wanted to be a part of that setup, right? A lot of people call them like liquidation plays because the stock just gets destroyed, right?
Yeah.
And LYT was one where there was very little squeezing. There was almost no squeezing. And I got short a very large position and it dumped 80%. I made like 170K in one account and then like another 30 or 40 another. I made like just over 200 grand on that particular trade or that setup, which is great. But the problem is there was HKD, there was ILAG, there was TOP. There's all these ones that were also this scammy, sketchy tickers that everyone wanted to drop 80%, and they did the opposite.
Squeeze first,
right? So I'm not proud of it because it's like, yes, it worked out, and yes, it gave me a big gain, but I soon realized later down the road that same setup had just bigger risks or worse. Right?
I see. So it's not like you're not proud of it because you broke the rules of bag holding, like with HKD, but it's more so you feel like that particular trade doesn't actually happen that often. Like where it doesn't squeeze and just go.
Right. That and along with the fact that it's like, I made a lot of money, but the risk I took to make that much money, knowing now what can happen if they didn't let that happen and they squeezed it instead, the risk reward is just very scary. Like that could have been that LYT, even though I made 200 grand, that could have been my first HKD before HKD.
I see.
I just didn't know it at the time. I didn't know that was a possibility, how hard they can squeeze a stock like that.
Okay.
So right, maybe it's not I'm not proud. It's just that I didn't know any better, right?
Okay.
The trade I'm really, really happy with to this day was my first 6-figure gain. This was also in February of 2021. The ticker WNDW.
Okay.
This was an OTC. I think it's still an OTC. It was one of those tickers that was hot during the whole year. I think it started at $1 or $2, and by the time of that peak of that bubble, I think it touched $40. So just this huge run. Yeah, and it wasn't all in one day. It was like over 2 months. It just first run was like from $4 to 10, then from 10 to 17, then from 17 to 25, and before you know it, the last huge run it was like from 25 to 40, and I had been trading it every single time it ran up. Like so, whenever it got extended, I would short it. Make some money.
Okay.
Short it some more, make some money. So it's like I had already traded this setup from this particular stock like 4 times. It was like the Fannie Mae example earlier in the episode where I said, I've seen this happen 4 or 5 times. Now it was happening in the matter of 3 or 4 months instead of years. And so when it touched $40, and I think it closed like 33, 34. I had seen it happen enough time. I said the odds of this being a red day tomorrow is like super, super high. And so I just shorted a large amount of size. I think I risked about 10 to 15 grand of a loss, which is big. I don't really like to risk that, but because all of the indicators were in my favor, I thought it was a very ideal kind of short play. And so I took bigger risk. It dropped as low as I think the high 20s, closed at like 31. And again, back to the when do I decide to swing or not? Well, we topped out at $40. We're only down to 31. This run started from like 25, but really this thing's up from $4 2 months ago.
Yeah.
So I put all that together and I'm like, you know what? This could go back like to the 20s, like lower 20s.
Okay.
So I did hold overnight, and the next day it panicked to 22 or like 20, 21, and I covered in 22. Made like 104 grand. And that's why I say I like that one more, because that is like the perfect kind of red day pattern for me.
Yeah.
And that was by far just the biggest gain on that particular setup that I've always felt good about in terms of risk reward, in terms of understanding it well enough. Again, the opposite of LYT, of not knowing what I didn't know. So yeah, that's still today one of my favorite trades. Yeah.
So you do sizing a lot more for those perfect A+ setups.
Yeah,
okay.
absolutely.
I think we learned that term recently from Lens, saying it's exponential bet sizing.
Yes. Yeah.
Yeah. Okay.
I don't have a perfect exact formula for how I choose to like exponentially bet. But yeah, after about 3 to 4 years in, I had started to realize like there were not all setups are created equally. And I don't mean that in a breakout equals a dip buy, or a dilution short means a parabolic short. I mean, like, this breakout is way different from that breakout.
Yeah.
Right? Because this breakout might only have 5 things going for it. Like, it might have okay news, it has okay volume. Maybe the breakout level is like, it's kind of sketchy, but it works.
Yeah.
Versus the breakout that happens next week, it's got great news, it's got a billionaire investor, it's got no dilution, it's got huge volume. Like, there's a scale in how good indicators can be. And so the better I can find trades that have almost all the indicators going for it, it's like the stars start aligning, you know. And if they do that, then it calls for more risk. Yeah, absolutely. So
I know you call yourself a discretionary trader, but I think the way you think about these setups is very systematic.
Yeah, I would say so. I try to, even though I'm technically discretionary, but I definitely try to discretionarily align with the system or the strategy as much as possible. Yeah.
So I think that's one of the things that a lot of new traders lack. They don't know how to categorize their trades, and they don't know which trades to focus on. They don't have those A+ setups, and they don't know how to identify them.
Right.
Because they don't, the criteria is all over the place, or they may not even have a criteria.
Right.
What would your advice be for those traders struggling with that?
This is I think why trading can be so difficult, because it's such a two-sided thing. And so on the one side, I want to say, waiting for the best setups is better, because, you get to a point where the top 10 or 20% of your trades are going to be all your profits, let's say. And so taking all those smaller trades that you think might work but aren't really that confident about, ultimately end up leading to being break even across the board. Like, I would say 80% of my trades really don't get me anywhere, but it's the top 20, top 10% that really move the needle in my account. The problem is, like you said, when you're beginning, you don't really know what that is. You don't know what your top setups are going to be. It takes time to figure that out and find that out. And unfortunately, in doing so, you have to test, you have to tinker, you have to take setups that you have no idea about. You simply have to lose to learn in some ways. And so that's why it's so tough, because that's in essence the learning curve for most traders. And so I think the best thing you can do is kind of make a conscious decision of how much do you want to pay for that learning curve. Back to the whole thing about I never really blew up my first account. I lost 70%, but I never really blew it up because I chose to let my learning curve be cheaper than it needed to be. Right? You can start with, say, if say you've got a good lump sum of money and you want to start trading with 50 grand. Right. That's great. That sounds amazing. Yeah. But like, if it's your first account, I think most people watching, if you've traded your first account, how it usually goes, which is, are you prepared to lose 80, 90, 100% of that 50 grand?
Yeah.
And you can say sure, but emotionally it's going to feel way worse than only losing 5. Right. And the reality is, you can learn the same lessons from only losing that 5 versus losing that 50. Yeah. It's just how much do you want to choose to learn? It's how much do you want to take it? And the problem is, some people generally don't make it meaningful unless it has an emotional pain to it, which is why losing that 50 might actually, for some people, unfortunately, be the only reason why they learn. Because for them, losing 50 won't mean much, but 500, that stings a little bit. Your brain makes you learn it the more painful it is. But if you can get out of that and realize no matter how much you lose, there's a lesson in it, no matter how big, I think you can begin to further refine that process that much quicker and have your learning curve essentially be cheaper. Get yourself quicker to that point of learning what A+ setups look like to actually then risk more and then make more money than you lose and become a very efficient exponential betting trader.
So now that you found a lot of success with your trading over the last couple of years, what keeps you going now? Like, what's the next big thing you're working towards?
I think a lot of it is still trading. Like, as much as even though I've made my millions, I still thoroughly enjoy and I don't want to call it greed, but I definitely would like to make more millions. At some point there's definitely a more relaxed state about it in terms of when I first started, but I definitely enjoy pushing and keep becoming a better trader. But beyond that, rewarding is also teaching. I wouldn't even be on this podcast had I not been transparent in public about my journey and how I've come to this point. And I wouldn't even be trading in general if it wasn't for people who also were willing to do that. So me and a couple of buddies, when I first started trading, it was very individual. I didn't even talk to anybody until I was about $30,000 in profits. And Jack Kellogg was the first guy who reached out to me. He was also up around $30,000 in profits, and he's become one of my closest friends in the trading community. And so then him, I also met a guy named Mike Huddy, who's also a really great trader, along with another guy named Dom Master Mateo. And we essentially all felt the same of like, we all enjoy teaching. Beyond just teaching, we also enjoy just each other's company. Like we're all good friends the last, call it 5 or 6 years. And we started our own online community called Clover Trading, which is just us being willing to share our trades and do webinars and teach and just build that community, because it's very lonely. It can be very lonely if you're just you and yourself and your screen. And it was for me for a very long time, but I'm okay being alone sometimes. But once I got to my first trading like in-person conference, I was like, this is amazing. Like, why haven't I gone to these sooner? And I think we wanted to recreate that. So we do boot camps. We just did one in Boston in August, and we want to do another one, I think probably in New York next year, because it's just a good way to just be in front of other traders and talk. I know you're going to Traders for a Cause. I'll be there. So it's stuff like that. It's amazing. It's fun.
Yeah, I think trading is very, very, very lonely. Even though I think a lot of us needed that in order to focus and find our first breakthrough, like you did in the beginning. But once you've gotten there, you want to be surrounded by other like-minded traders.
Absolutely. And trading it's so weird. I felt so uncomfortable because I've never been one to really want to share my stuff, because I always feel like I'm bragging. I used to feel like as a kid, I just didn't want to tell any people about anything. And maybe that's why I never really told anyone what I was doing in terms of trading wise. But I learned that if I'm not telling people about it, it's like they'll just never know. It doesn't have to be bragging. It doesn't have to be, it could just be talking about your experience and sharing what you're going through, because so many people are going through the same thing. And it's very easy to think that you're the only one going through it, when the reality is everyone's taken a loss like you. Everyone's felt these emotions that trading brings. And so being able to share that and pretty much relive other people's experiences or share your experiences with other people, I think is huge. It's a huge help. So
where can people find you on social media?
Social media, so Twitter is at Trader Kyle C, just the letter C. Instagram is Kyle_C Williams. YouTube is Kyle Williams. You can find me there as well. So
cool. Thanks so much for sharing with our audience today, Kyle.
Absolutely. Thanks for having me. This is great.
If you enjoyed this interview with Kyle Williams, make sure to hit the like button, and you can check out even more conversations with pro traders over here.